going on? Chris here, and we're going to just do the daily overview. So, one thing I've added is a 3 day kind of view, and I really like this 3 day view. If we were to go back, it does really well at finding reversals at the top and bottom. I mean, we never really got a 3 day reversal until here. Like that's kind of that's the assumption. But for the most part, it looks like it's fast enough to where it's not a weekly lag, and because on the weekly we don't have any signal. I mean, we had the buy the dip one, but then it was really weak coming out of that break. It's been a while too, and there hasn't been a bullish order block form. So it's not strong enough to form a bullish weekly order block. So we have to go a little faster. And we just had a 3 day break to the downside, and this is kind of saying where the backstop is. And we just happen to be at it right now. So I'm looking definitely any resumption out of these wick lows, it's toast, it's done. And we've kind of just been waffling a little bit, just staying within this range. But anything hitting 39.94 on this index or on this synthetic data feed, it's definitely looks like a good entry to the short side. Just the top of the breaker. But we can take a look at oil. So the main conclusion there is that we got a breakdown on the SP500 on the 3 day closing basis. And we're almost into the end of the 3rd day close. One more day. All right, and then look at oil. Oil, we're bearish, and we're going into resistance on a 12-hour closing basis. I think it's updated. Make sure the script's running. Yeah. Oh, on a 12-hour closing basis on the SP500, our resistance is in a similar area. If we were to take this high and move it to the 3 day, let's just do a new line. It's roughly at the same area. So that looks like the range that I would shoot for. Some kind of spike, maybe anything above 39.94 and right at 40.18 for a nice deep short to the downside. Now back to oil, WTI crude. We got a retest resumption. We got nested breaker on the 12-hour, so it's pretty messy. If we check on the 3 day, it's just bearish. So we're waiting for some kind of break, and the best break would be a 4-hour to the downside. After all of that, waiting through all that pain of these nested breakers, we finally got a breaker block that we can depend upon that will resolve the congestion here. The congestion here and the congestion here. But we are positioned bearish on the 3 day and on the weekly. Now if we go to Brent crude, it should be the same story, and it pretty much is. Nested breaker, kind of. It's a little bit old. We got a 4-hour breaker to watch to the downside for Brent there, and we're positioned bearish on the 3 day and the weekly. Move this down here because I don't really need that. And on the weekly, we're positioned bearish. We take a look at the currencies. So safe haven currencies, weekly closing basis and monthly closing basis. We're into the monthly bullish order block, and we got a weekly bearish. We look at the 3 day. We broke out on the 3 day, and we haven't yet absorbed this bullish breaker. So if we get any close below this level, then it's bad. We look at the 12-hour. We are in the bearish order block on the 12-hour, so we would want to wait until this flips to the upside before getting involved. So that's it for the US dollar. And conclusion is we need this 12-hour to break to the upside. On the euro, the risk on associated currency, we're elevated, but the thing is with this weekly, it's very much delayed. It's definitely a confirmation signal for more upward movement if we got a break to the upside, and definitely late confirmation to the downside for more downward movement. Very strong downward movement. For a 3-day, we've already broken down, retested, and it's holding. If the longer we stay below this level, and the longer the level stays, especially like a deviation pattern, deviation left shoulder, right shoulder, the more it will come true. We would look to the 12-hour breakers, and it looks like we're kind of stagnating. From there, we would look to maybe the 4-hour. I don't know. We got this nested breaker, so we're just waiting for an update in the movement of the chop, and I think we need to wait for the news to really have this resolve. Look at to the yen. Come on. Weekly bullish order block now. So the breaker from the bears, we broke them, retested them, resumed. Now we got a bullish weekly order block on the 3-day. Any kind of retest in here would be really nice. Holding it, maybe these wick lows. Kind of retest in here, buy it up, send it up. 12-hour, similar story. This looks like it's a little more on the higher side. If we were to move these up to say here, I'd say it's roughly kind of where the 12-hour support would be. Roughly. So it's kind of like, I don't know if it's going to come down to touchdown here, but that would be the deviation left shoulder, right shoulder kind of deal. Something to look forward to for some kind of dip. For hedging. Any kind of dip into here would be like a really good hedging opportunity for upside. VIX weekly. So because weekly is a really late signal and it's basically confirmed, we're just waiting for the resumption out. So on the 3-day, we got this bullish 3-day order block. We've already retested deep into it and resumed. Now it's pretty much waiting for 12-hour or 4-hour to the upside. We got 4-hour. I don't know. I think with the forecast that we got right here. Oh, this is the intraday. Intra-week with the Q Spectrum 2 still on a downside posture, and us rolling over on the top of the trading spectrum with the best forward analysis cycle, and the basically peak potential reversal for the decennial cycle, the 10-year annual seasonal or 10-year annual cycle, whichever. I think this 4-hour, if we got a breaker to the upside, is to be taken seriously with a great threat. The thing is, I would like to believe that we're going to come down and retest this naked 12-hour breaker first, and then break to the upside. And I think that, just speculating, that's what would happen on Wednesday, is that we would get extreme overbought from the news, and then in some way the risky people, if they wanted, depending on if they're risky or not, like depending on how you want to handle it, if you got like a small time frame break, market structure breakdown, it would be less risky versus like a buy limit at a random area. That would be a strategy for selling the highs, assuming that this 3-day breaker to the downside is correct on the bias, and I think it is. It's kind of just so. Another thing is that the institutions and their bias is flipping. So when the price started to move down, the money flow index started to move down. So if we took out these lows, so like we're in more towards 50 than before, and we just need to get to, I don't know what this is, 32. So I think it's coming. It's taking its time. The institutions are rotating their position, and it's coming. But with it, the posturing going more neutral, heading in this direction, the assumption is that it would continue going in this direction to the downside, and the institutions would be bearish, and it would match our market structure, and it would match our cycle forecast with the math cycle. The math cycles of either walk forward analysis, the math cycle of 10-year annual seasonal, just past price history of the decades ending in 3, or the years ending in 3 per decade, and creating a math behavior cycle out of that, and then the AI cycle of just finding all these cycles that repeated and created a hybrid committee line. And the idea is that the confluence of all of that would give us success into the week. And so we're still waiting for that big move. Any kind of spike up for Hail Mary entry to the downside, it would be most welcome. We use the what's this called? Supply and demand. We found a daily fair value gap roughly around 4,100. So if we were to back up here and draw a daily fair value gap, pretty much the daily fair value gap is where's the box? Where's the box? There is no box. Oh gosh. I thought I made a tool where the box was easy to find. Box. Shapes. I need to go to options and change it. This is a new installation. So here's the fair value gap. Yep. So if we filled this fair value gap, the idea is that this would be defended on particularly this supply and demand zone. And we have a stop loss to be put in automatically by this ATR trail. And it would put us in the bet for $50 basically with the risk that gets put on by the trail. And that's the Hail Mary entry, is that if we get a spike up, we're hoping it goes up here. We get in, we buy the top. And if we lose, it's roughly 2%. 2,500, $50 loss, 2%. So all in all, I think that would pretty much take all our profit. I mean, we profited this week $77, up 15 from yesterday, roughly. And I think that's good enough for a cushion. If we do $50 risk per trade, hey, I don't mind taking this buy limit or sell limit and eating the cost of trying to get the top. So that's kind of just my assumption. My assumption is that the liquidity on the 4-hour will get purged, and specifically this will get purged, this will get purged, and the liquidity, and we would hit this fill the fair value gap here really quick, come back down, sell off quickly. But anything goes. We looked at this chart on the 3-day, and it looks difficult to imagine it reaching 4,100, and that's kind of what I think. If we were to measure the pretty much the near the top for the head and shoulders, it looks like the head on the 12-hour close would put us at 4065. So it gives us a little bit of a chance. If we were to do the wick, puts us at 4,107. So this gives us a chance for this area 4,100 and our entry to get hit because it's 4,103.56. This is 4,107. So it's a little bit under 4,107.05. So in my mind, the Hail Mary entry is there, and if we get hit on it, great. We will try to scale on the way down, on the way in. I'm thinking about what's cool on MetaTrader 4 is pretty much I think I got 3 trade bots for trading strategies. One's just a toolkit, but the toolkit can scale in to the downside entries, and I think that's what I want. I want something to scale on the way down. I have one for the opening range, and so this is the opening range, the opening range breakout bot. We have the market reversal alert. So whenever on the retest resumption down here, we would get an entry to the downside. But yeah, I think I'm gonna have to use a different one with the toolkit with the auto scale as it goes my way. So then the price action toolkit, here it is. I have to fiddle with the buttons, but for the most part, the one thing I want is scale into winners. Scale into winners true, and then it would add an entry per tick or per 5 minute. I think that's point the one that I'm talking about here. Scale in on candle close, not tick. So I could do candle close or tick, and I have to decide for myself what I want to do. I'm thinking maybe scale on points because it's one whole lot that I do per entry. But if it's tick and it's one 0.01 lot, I think I'll be just fine per tick on the way down. But yeah, first is the Hail Mary entry, scale in per tick on winners on the way down, and then go from there. So I think that would be, if I were to do like a sophisticated kind of position building strategy, that's what I would do. I wouldn't do scale in on if we don't go to the extreme end of the range, just because we want signs of like kind of a final move, and if we don't get that final move, how do you know it's really over? So it's more dangerous when it's not complete or exhausted. Or like there's trapped bulls. The whole idea is a trap play, and the trap is usually the safest because it has to do with buyers and sellers. You got to think of the auction model, and in some way, you want to get the best deal, and the best way to get the best deal is to trap the buyers. So that's kind of just the way we're gonna do it. So anyways, thanks for watching. See you next video.